I'm Corbett Wall with DV Auction, here with your feeder flash for Tuesday, October the 19th, brought to you in part by Safeguard. Is your dewormer working? Text the word SAFE to the number 48109. You'll receive a free fecal test kit for your cattle, and you'll be also entered to win 100 doses of Safeguard range cubes and an ATV cube feeder. Slaughter capacity, and we've been talking about that here for the last few years, trying to figure out how we can increase slaughter capacity. Well, your big four packers are not going to do that, and it seems like anytime anybody tries to come along to raise the slaughter capacity, anything that's significant, your big four crush them. But yet we're seeing some producer groups that are trying to get some things put together, some large producers. They're kind of forming cooperatives and things like that to try to build some slaughter capacity and to bring about a little bit of competition to maybe not make the kind of money that the big four have been making since the pandemic, and even before that when we had the plant fire, but sop up a little bit of gravy around the edge and help the entire industry, help people that's not even involved in it. And we just wonder how that's going to work. We've seen a lot of it talk. If I had one more guy say, how can we pool our money, use checkoff dollars, things like that, to try to build some packing facility. If I heard one more person say that, I think I'm going to vomit. But it can be done. It's tough. That's the thing that we're trying to warn about. Of course, they know. The guys that are getting into it know. I know several outfits that are thinking about building some slaughter plants of capacity that would be significant. One in Nebraska, one in Iowa, one in Texas. There's still talk about one in Kansas maybe that could happen. But it's a big venture, it's a big risk, and I mean you're taking the bull by the horns right here, guys. I've said it before. I don't shy away from talking about it. Your Mafia started out in your meat packing districts in your big cities back east. And it's not a coincidence that's where the mob kind of festered and grew, because there's a lot of crooked shit that goes on in these packing houses and these big outfits that run them. And so you gotta be prepared to get kind of down and dirty if you're going to get in there and compete with them. And I believe that some of these outfits have not anything illegal, but they went in there and hired people away from them, some people that are in the know, some people that have skills, people that know what it takes to get it done. Because it's one thing to get the cattle in there and slaughter them. Of course, you got to figure out how to do all that. You got to figure out how to run the thing. You got to figure out all the different cuts that you need to make. You got to have people that have skills to do that. But then once you get that done, you got to be able to sell the product. And you think they're not going to try to cut your throat whenever you do? We know that happens. We've already seen it with our friend Jim Herzog and his boys that have built a smaller plant than what I'm talking about there near Butler, Missouri, just right beside their sale barn. They were making the best cattle that they could raise, all natural, no hormones and everything, bringing them through their own plant. That's what everybody says we've been needing to do. We need to get closer to the cattle, closer to the farm and ranch, and do all that, and grassroots type of a deal. That's exactly what they did. They spent a lot of money getting this thing going. They did it right. They've got a retail store in the front of it. They've learned how to do all that. They've hired the people. They've got them in there, and started producing some really top quality dry aged beef, and then did the legwork and started getting it into some of those bigger supermarkets on the south side of Kansas City, Hy-Vee by the name, they started getting into there, and I was really impressed with all the work that they had done and just really getting along good. And then all of a sudden they got just big enough where it tripped a trigger, that one of your big dogs found out about it, and one of your major packers, and they made a call, and they know people up the line at IV. They called down the line and said, shut it off. No more will we be doing that. And they didn't give them a reason. They made up some stuff, but didn't give them a real good reason for why that would happen, why they would be cutting them off, and then just cut it off right there. That's what they're going to try to do when the bigger packers come in there too. And not only will they do that, they'll try to penalize their customers. So if they have customers that go in there to these new plants and they try to buy some product, hopefully these new packing plants will be able to supply their customers with everything that they need, because if they can't fill that whole order and they have to go to one of your majors to try to finish it off, you want to talk about gouging. You thought the gouging was bad whenever we had the plant fire or when we had the worst of the COVID. You haven't seen gouging. They will threaten those outfits, just the way that the mob does, and I guarantee you it's going to happen. These new ventures that are ready to get into this, they understand that, and that's why they've hired people that kind of understand what they got to do to make those successful. I hope they work. How are they going to run those plants? Are they going to open these packing plants and start going in there and bidding on cattle in the cash market? For the most part, no. So, we're not going to completely get back to what we're trying to get to. Most of these new plants are going to be set up similar to what U.S. premium beef is set up on. Those that risked money, those that put money up, those that invested in these plants are going to have the right to bring their cattle in there, and they may sell shares to get some more funding that they need, similar to the way that U.S. premium beef is done, and then those shares will guarantee them to be able to harvest so many cattle through those facilities. And you think, well, that's not going to help our cash market out. Anytime they can take product off the market, that helps. And then you've seen, I tell you what, the North American Meat Institute, they're not a big fan of this at all. They're the trade organization that works for the meat and poultry mafia. So they're not liking it, and then their buddies over at NCBA, they've gone together and they've warned these new ventures, oh gosh, we don't really want you guys to get hung out to dry here, because maybe you don't know it, but these supplies are kind of going down, and we're going to get in a tight supply situation, and you guys won't be able to survive. Wouldn't that be kind of comforting if we had, if our demand outweighed supply for a change? What does that equal? Higher prices. The way that these big four have managed the supplies, which, for the last, 30, 40, 50 years, they've just been managing these supplies. And they know they're going to get them all anyway. So they just kind of, when do you remember having so many mechanical breakdowns and having so much cooler clean? Those must be the cleanest damn coolers I've ever seen. These cow killers, the slaughter cow manufacturers, processors, and they're not all big four. They are some, but there's some other outfits involved in that. We don't see them cutting down production. They go ahead and work. They clean the coolers around the carcasses, and they've got those things open wide up because the cows are there and the demand's there, and so they're keeping it going. But these slaughter, steer, and heifer guys, the fed, steer, and heifer guys are the ones that are really kind of backing off on all the time. They don't want to push the harvest too much. Well, the kind of money they're making, you'd think that they would, but they're just so disciplined because they know they're going to get them all anyway. I've told you guys several times about the old bull and the young bull. The old bull standing on the hill, and they unload the new fresh 2-year-old heifers, and the young bull tells the old bull, let's run down there and breed one of those heifers. And the old bull says, let's walk down there and breed them all. That's the way your big four have been doing it. They've been breeding, the hard way, all of our cattle feeders and producers here for the last 50 years. And the consumers on the other end, whether they know it or not. But the profiteering that they did through the pandemic and through these black swans is criminal. Literally criminal, but we don't have anybody with balls enough to go in there and prosecute them. But them telling these new slaughter ventures that they, we'd hate to see you get in here and get in a bind or lose money. That kind of reminds me of whenever you see the old men come in for the lunch special, and one of them's already eaten his dessert, and that other one's still finishing his main course, and says, is that dessert any good? Is that pie any good? And he says, no, I don't think you'd like it. You better let me keep yours too. You've seen that happen. But, we've got some things coming down the line. I've been talking about these minimum negotiated bills that are out there, and it sounds like that indeed the Chuck Grassley 5014 and the Deb Fisher cattle market transparency is combining into something. We've seen some word of that's going to come down. Well, we knew that they couldn't get 5014. I told you that. Everybody else told you that. Can't get it. There's people in hell wanting ice water, but you can't get it. So we have to get something while the iron's hot, while the Biden administration is trying to blame all this inflation on the meat industry. So let's take advantage of that and get something done. We got to get something, just anything. And so now we're hearing that they've pulled that contract library part off of Deb Fisher's bill, because Representative Dusty Johnson out of South Dakota has introduced an act, a bill all by itself called the Cattle Contract Library Act. And so that's trying to get that away from that so we can get something passed. The guys have been working on getting something done. I know it doesn't seem like it, but they've been working on something getting done. I don't know all the ins and outs of it, but we just got to keep trying to push forward. We got to support these ventures that are trying to build some new packing plants, and we hope they work. And if they would just take a little bit of product around the edges, there would be less out there, and would eventually end up for better demand and higher prices. It would have to. Let's talk about your board. To start out the week on Monday, October live cattle futures down 52 cents at 125.45. December down 55 at 130.52. Going your back months of your live cattle down 55 cents to up 15. So just a little bit rough on your live cattle to start off the week. It was a lot worse on your feeder cattle. Of course, they are probably more overbought now, after those, not last week, but the previous 2-week sessions. October feeder cattle down $1.82 to start the week out at 155.75. I wouldn't be surprised at all to see that bounce right back. November down 207 at 159.35. Your back months of feeder cattle down 50 cents to down 202. Corn didn't help either. Your spot December corn new crop here up 7 cents at 5.32 3/4 on Monday. Your weighted average on last week's negotiated fed cattle trade in your 5-area feeding region, everybody's just going on and on about how active the negotiated trade has been. 79,700 head. We hadn't been that many years ago. We had that in all 5 areas. 79,700 head. It is better than what we've had here the last few months, but that compares to 68,600 last week, 92,500 the same week a year ago. Live sales of steers and heifers last week ranged from 122 to 125.30. Your weighted average on and that was steady to $1 higher on a range. Weighted average on live steers 123.84. That's 88 cents higher than the previous week. The heifers were not as much. Your dressed steers and heifers ranged in price from $1.93 to $2 dressed. not much of the $2. And the 196 was your practical top there. That's $1 to $3 higher. Your weighted average on dressed steers 195.70, up 33 cents from the weighted average from the previous week on dressed steers. Nationwide negotiated, pure negotiated cash trade, 95,900 head, and that does sound pretty good. If we could keep it around 100,000, we'd have a better market consistently and better demand. But a year ago it was 111,100. So I mean, we're not setting the world on fire. Only 18% of that 95,900 was for the 2 to 4 week delivery. This is about the third or fourth week in a row that we haven't had a whole lot of that out front trade. Telling me your packers are kind of close to the knife there. So we've got opportunity to consistently gain a little bit of ground here all through this fourth quarter. And guys just they got to ask more to get it. You got to ask more. You got to dig in and keep trying to get it. That's the only way we'll ever gain any ground. The negotiated grid, and I've told you what a joke that is. They just keep turning in this negotiated grid. It ain't a damn bit different than the grid they had before, but it's the way they want to get around this negotiated minimums that's being threatened to them. And I hope they don't allow any of the negotiated grid to represent negotiated trade, because there's no negotiation in it. It's take it or leave it. But they turned in 52,600 head last week. That's nearly 30,000 more than the same week a year ago, whenever they weren't concerned about that. But formula trade's still the biggest by far, 258,800 head. Box beef cutout values lower, but not that much lower. They're starting to find a bottom here. Choice cuts on Monday afternoon, 280.09 down 15. Selects down 81 cents at 259.81. What else is going on? You know, I tell you guys all the time about this livestock risk protection. You need to get a hold of some professionals that know how to get that done and help you get that done. They sell the policies. Get in touch with Livestock Risk Services. They're one of those professionals that know how to handle this, know how to get this done. They can coach you. You tell them what you're looking for. Those deals are no-brainers, guys. You can literally lock those cattle in with one of these LRP policies for more than what you're having to give for them right now. I'm talking about for early summer, late spring, early summer. You can lock them in at a sales price higher than what those stockers are costing you now. And all you got to do is keep them alive and put some weight on them. And it doesn't cost you very much, and you don't have to worry about margin calls and all these kinds of things. But get in touch with somebody that knows what they're talking about. Let's talk about your feeder cattle market on Monday to start the week out. Real-time index on DV auction late in the day on Monday at 155.26. That was up $1.02. That's significant. Starting the week out with cash prices that much higher than the end of last week when the board was down pretty hard on feeders. Some of your big sales to start out the week: Oklahoma National Stockyards in Oklahoma City, 6,500 head. Feeders $1 to $3 higher. Steer calves $2 to $4 higher. Heifer calves unevenly steady. Joplin Regional Stockyard, 4,500 head. Steers $2 to $9 higher, and I checked that out, and it was legit, guys. We got a newer market reporter in there since Rick Huffman retired, but did a good job calling that market. That's what it was. Heifers steady to $2 higher. Stick out deal on steers, as good as we saw anywhere on Monday. 144 head of steers in Joplin, weighed 696 at 170.50. Wow. How about a big sale up in the Northern Plains? Faith Livestock auction of Faith, South Dakota. 8,000 head plus. They're still moving those calves up there. Going to have huge runs in the Northern Plains this week. Huge runs everywhere. Phillip will have a big one. Belfouche will have a big one. Talked to Justin Tupper at St. Ange. He added a Wednesday sale here coming up tomorrow. He added a Wednesday sale because of the big snows that they got last week, which cut them down, and they needed to add another sale. Going to have probably 3,000 on Wednesday, have 10,000 calves on Friday, he's looking at 3,000, 3,500 cows, mostly weigh-ups on Saturday. My goodness. Look at Faith Livestock Auction. Steer calves look to me steady to $1 lower. Heifer calves steady to $5 lower. Not going to get this market reported anywhere else. But look at this, the best tested weights here on this market report from Cattle Market Central. 1,485 head of 4-weight steers, average 455 at 196.62. 2,667 head of 5-weight steer calves in Faith, South Dakota. They would be fancy. They had an average weight of 539, a weighted average price of 180.52. Pretty darn good. How about the heifers? 1,516 head of 4-weight heifers. They're not keeping many back, guys. They don't have the grass for it. They got a weighted average weight of 452, weighted average price of 166.31. 886 head of the 5-weight heifers, average 5 1/4 at 164.04. Stick out deal on some peewees in Faith, South Dakota. 151 head, weighed 390 pounds at 227. That'd be a big time quote. How about some other quotes from around the region? Sioux Falls Regional Livestock sold some big feeders, 262 head of them, weighed 1,085 pounds at $149. That'd be nothing to sneeze at. How about the little market with the big prices? Toby Myers there at Sylvan Sales Commission, Sylvan Grove, Kansas. 79 head, weighed 691 at 170.50. But the best quote that I saw anywhere on Monday come out of Russell Livestock Market in Russell, Iowa. It's your Zach Tran top quote for the day. 63 head of steers, weighed 860 pounds at 166.10. And that's your feeder flash for Tuesday.